Is Bitcoin about to break out or face a massive correction? With the price locked in a tight range and the market at a potential tipping point, everyone is asking, what happens next? Well, in this video, I'm going to uncover the truth behind Bitcoin's current stagnation, explain how the altcoin market is signaling a major shift, and show you the key support and resistance levels you need to watch going forward. Let's dive right in. Bitcoin has been caught in a volatile range between 93,000 and 102,000 over the past week, swinging sharply between those levels. It briefly dipped to the lower end before rebounding, but no clear trend has emerged. This uncertainty comes as President Trump's tariff threats against Canada, Mexico, and China shake up the broader market. Meanwhile, a strong US dollar is tightening liquidity, adding more pressure. Despite the turbulence, Bitcoin remains stuck in this range, with neither bulls nor bears taking full control. While Bitcoin remains relatively stable, the altcoin market is taking a beating. Many altcoins are struggling due to a lack of strong use cases or mainstream adoption, and it's showing in the price action. Across the board, altcoins are underperforming Bitcoin, with nearly every subsector deep in the red. In just 2 weeks, the total altcoin market cap has plunged by over $200 billion, one of the largest declines on record, signaling a major capitulation event. This looks like an altcoin bear market, even though Bitcoin itself isn't showing the same weakness. Historically, the current drawdown is severe in percentage terms, though not quite as brutal as the worst sell-offs of late 2022. While painful, it's still within the range of what's normal for a rough patch in the crypto cycle. If you're finding these on-chain insights valuable and want to stay ahead of the game, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. Now let's dive back into the analysis. Even though Bitcoin's price hasn't moved much overall, investors still locked in massive losses, one of the largest in this bull cycle. When BTC dropped to $93,000, realized losses spiked to around $500 million, marking a major flush out similar to previous local corrections. The only sell-off that stands out as worse was in August 2023, when the unwinding of the yen carry trade triggered a staggering $1.3 billion in losses in a single day. However, as Bitcoin's market grows, it's crucial to account for scale. So, while the headline number looks extreme, in context, it's nothing out of the ordinary. In bull markets, long-term holders typically enjoy strong gains, which means the biggest losses often come from short-term traders, those who bought in recently and are more reactive to price swings. This cycle is playing out once again. Right now, most of the selling pressure is coming from newer investors, particularly those who jumped in within the last month. The hardest hit group, those holding for just 1 week to 1 month, have racked up nearly $480 million in losses. We're witnessing the classic pattern of latecomers buying in at high prices, getting shaken out by the volatility, and then panic selling at a loss. This pattern is something we see in both bull and bear markets, as emotional reactions to price swings often take over and drive these losses. With Bitcoin currently stuck in a choppy trading range, on-chain pricing models are invaluable for pinpointing key support and resistance levels. One of the most useful tools for this is the MVRV score, which tracks market trends by measuring how much investors are in profit or at a loss. Right now, Bitcoin is hovering around its mean support level at $96,000. If it drops any further, the next significant support level sits at the -1 standard deviation, around $80,000, an area where buyers could potentially step in. On the flip side, if Bitcoin rallies, the +1 standard deviation resistance level comes in at 118,000, where investors may start locking in profits. For now, Bitcoin is holding steady near support, but if volatility picks up, these levels will be crucial to watch for any signs of a breakout or breakdown. Since most of the losses are coming from short-term holders, it's crucial to assess their cost basis as this level has historically acted as a strong support during bull markets. Currently, the average cost basis for short-term holders sits around $92,000, and it's essential for bulls to defend this area to prevent further downside pressure. Taking a broader view, we also see a key range for short-term holders. The plus 1 sigma level sits at 131,000, while the minus 1 sigma level is around 71,000. Right now, Bitcoin is trading above the average short-term holder cost basis, indicating that bulls are still in control. However, during last week's sell-off, we came dangerously close to testing this critical support level, which could signal a shift in market dynamics. So, to wrap things up, Bitcoin is currently caught in a tight trading range, bouncing between key support at 93,000 and resistance at 102,000. Right now, there's no clear trend emerging, so it's crucial to keep an eye on these levels. If Bitcoin breaks either way, it could set the stage for the next major move. Meanwhile, the altcoin market is facing a tough time. We've seen a dramatic $200 billion drop in market cap in just 2 weeks, signaling a possible altcoin bear market. While Bitcoin hasn't been hit as hard, this capitulation in altcoins could shift the focus back to Bitcoin, especially if the altcoin weakness continues. Lastly, a lot of the recent selling pressure is coming from short-term holders who entered during the recent rally. Their cost basis of around $92,000 is a key level, and it's important for bulls to defend this to avoid further downside. If Bitcoin stays above that level, it suggests that the bulls are still in control for now. So, keep an eye on these levels, and we'll see where the market goes from here. And that's all for today's analysis. Want more in-depth insights on today's topic? If you prefer written content, join my free newsletter for exclusive analysis. Click the link in the description. Thanks for tuning in, and I'll see you in the next one.